Canadians are feeling the pinch of the rising cost of living, inflation, and high interest rates. And some experts say that investing in the future amid all this uncertainty might be a powerful tool to combat these challenges. But with so many sectors to choose from and the uncertainty of choosing the best investments for your portfolio, many may be too intimidated to get started or to expand into new investment opportunities. Well, joining us now to unravel some of the secrets behind smart investing is Brendan Caldwell, director at Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Always great to be here, Nima.
Always great to have you, Brendan. Now, looking at all that's happening in our country, how do you choose what sectors to invest in for your clients?
Well, we tend to choose companies rather than sectors. That having been said, we're looking for companies that have strong managements, the capacity to grow their dividends, and that for some reason or another, particularly in our Canadian strategy, our Canadian value momentum strategy, looking for companies that are being re-rated in a positive way by the market. And one might even not know why they're being re-rated higher, but something is clicking. We want companies that have very good value characteristics, that is to say they don't have too much debt, that their earnings are growing. But you can buy companies that are good value and be years and years before anybody recognizes your brilliance in buying that stock. So that's why we look for companies where it's just starting to be recognized by the market and try and catch that curve of the hockey stick as much as we can.
All right, Brendan, and you often use this metaphor with your clients, the ship in a river metaphor. Can you tell us a little bit more about this and what it has to do with investing?
Well, ship might be a big thing, but boat or canoe or something, it's the most Canadian of analogies, eh? But if you've been on a canoe trip, you can put, if there's a safe way and a dangerous way to go down a river, you can put pretty much as many boats as you'd like down the safe way, and it doesn't change the nature of the river at all. Investing isn't like that, not in a little bit. Because if you try and cram too many boats, and virtually every good investment idea has been taken to its illogical conclusion, and that's how bubbles happen, from the tulip bubble in the Netherlands to the South Sea bubble in England to the tech wreck of the late 1900s, 2000s. If you take too many things and you try and jam it down that, and where I'm noticing that in today's market is index investing, passive investing. It was a thought going back 60, 70 years that if you invested the market, if you invested in a passive strategy, you got the benefit of millions of people making millions of individual decisions. Well, now with millions of people all going into index investing, it's not millions of people making millions of individual decisions, but millions of people making but one decision. And that has the effect of changing the nature of the river. So what was safe becomes dangerous and vice versa. So I think there are opportunities to look at companies that might not be part of indices, that might not be the usual suspects, particularly here in Canada, where virtually every Canadian portfolio has one of five or seven of their biggest holdings are usually all pretty much the same.
So right now, what to you is the perfect portfolio mix, Brendan?
Well, particularly in this market, the perfect portfolio mix today would be to have all cash. But what I think you're likely to see over the next several months is that you'll see the stocks that haven't done very well this year do worse. I think particularly interest rates sensitive stocks like the pipelines and utilities and banks will probably continue to be under pressure, both from higher interest rates and also from tax loss selling. So I think they'll do worse through the balance of the year, but then I think you'll have a turn. I think come January, you're likely to see the tech stocks, which have done so well through 2023, have a sell-off also for tax reasons. People don't want to take their gains this year, but will defer them till 2024. I think you'll see in January the tech stocks perhaps sell off, and some of these other companies, which will at that point, I believe, be quite undervalued, have something of a rally.
Something to keep our eyes out for. Brandon Caldwell, thank you again for your time today on Forum Daily.
Thank you, Nima.